Welcome to the deep dive. We take complex information, boil it down, and hopefully give you those aha moments.
Exactly. And today, we're tackling a really significant event in biotech Amgen's Q3 2025 earnings report.
Yeah, this one made waves. The report dropped after hours, maybe a small initial bump, but then, wow.
An almost 8% surge the next trading day. That's not just a reaction, that's major conviction building overnight.
Right. It tells you the market dug deeper than the headlines. Found something really catalytic. So our mission today is to unpack what exactly fueled that huge repricing for Amgen.
Okay, let's start with the basics, the numbers. It was a classic beat and raise quarter, no doubt about it.
How big a beat are we talking?
Pretty substantial. Revenue hit $9.56 billion. That's up 12% year over year and well above the $8.97 billion consensus. They really cleared that hurdle.
And earnings per share.
Same story. Non-GAAP EPS came in at $5.64. The street was looking for, what, $5 or 1 cent? So again, a significant beat.
And they immediately raised guidance off that strength.
Yep. Full year 2025 outlook got a lift. Revenue now targeted between $35.8 and $36.6 billion. And non-GAAP EPS expected between $20.60 and $21.40. Financially, you can't argue. It was a strong quarter.
Okay, but let's circle back to that market reaction because, like you said, the big move wasn't immediate. Why the delay if the numbers were that good?
That's the million-dollar question, isn't it? It suggests the market, analysts, investors, they were looking beyond the Q3 P&L.
Like the good quarter was maybe already priced in to some extent.
Sort of. Really, the real excitement wasn't about the past 3 months. It was about the commentary, the pipeline updates, the future story Amgen was telling. The rally was forward-looking.
Okay, so let's get into that operational performance. What's working well under the hood?
Well, the established growth drivers are still firing. Repatha for cardiovascular sales jumped 40% year over year, hit $794 million.
Wow, 40% is still huge growth for that drug.
It is. And Prolia for bone health, also solid. $1.1 billion in sales, up 9%. Those are reliable pillars.
And you mentioned biosimilars earlier.
Oh yeah, that portfolio is really humming now. Sales surged 52% year over year. Think about that. It's now on track for about $3 billion annually. That's not a side business anymore. It's a core growth engine providing steady volume.
But it wasn't all positive, right? There's always a headwind somewhere.
True. The big one continues to be Enbrel, the legacy inflammation drug. Sales dropped 30% year over year, down to $580 million.
Ouch. What's driving that decline? Still pricing pressure?
Primarily, yes. Management pointed specifically to Medicare Part D impacts and the 340B program pricing pressures.
Can you quickly remind us what 340B pressure means in this context?
Sure. It's a U.S. federal program that mandates pretty steep discounts for hospitals and clinics serving low-income populations. As Enbrel's usage shifts or contracts, those mandatory discounts really bite into the net price Amgen receives. It's a structural drag they're actively trying to outgrow with newer products.
Okay, so they're managing that decline but investing heavily in the future growth areas. That costs money, right? Did we see that in the margins?
Absolutely. That was very clear. Non-GAAP operating margin came in at 47.1%. That sounds high, but it was actually down 250 basis points compared to last year.
And that drop was driven by R&D spending.
Directly. R&D expenses shot up 31% year over year. Management was very deliberate in explaining this.
They framed it as intentional investment.
Exactly. They said, look, we're choosing to compress margins now to pour fuel on the fire for our late-stage pipeline. They specifically called out Maritide, Obesity, and Zaritamig. The bet is that this spending leads to much bigger sustainable returns down the road.
And judging by the stock reaction, it seems the market bought that explanation. They weren't spooked by the margin dip.
It seems not. They likely saw it validated by the company's overall financial health. Free cash flow was still really strong at $4.2 billion for the quarter.
And they're managing the balance sheet well, too.
Very well. They've made significant progress on paying down debt from the Horizon acquisition, hitting their target leverage levels ahead of schedule. They retired $6 billion in debt just this year.
So they have the cash flow, they're fixing the balance sheet. What about shareholder returns? Buybacks?
That's another sign of their priorities. They explicitly capped buybacks at $500 million or less. The message is clear. Right now, it's pipeline investment and debt reduction first, aggressive buybacks second, build the foundation for growth.
Which brings us, I think, to the core reason for that 8% stock surge.
Precisely. The pipeline. And really, one word dominated the narrative, Maritide.
The obesity drug candidate. That's what got everyone excited.
Overwhelmingly, yes. The market is laser-focused on two upcoming mid-stage readouts for Maritide. It's part 2 of the phase 2 study in chronic weight management, and those results are expected by the end of this year, 2025.
Why are these specific phase 2 results so critical?
Because they're testing things that could make Maritide totally different from the current GLP-1s. Specifically, they're looking at quarterly dosing.
Quarterly, as in one shot every 3 months.
Potentially, yes. They're also testing lower monthly doses. The goal is to figure out the best maintenance strategy. If they can show good results with less frequent dosing, especially quarterly, that's a game changer.
Wow. Compared to weekly shots for most current therapies, that would be a huge convenience factor.
Exactly. Think about patient adherence, ease of use. It could carve out a massive niche, maybe even pull patients from existing treatments. It could fundamentally reshape the competitive landscape.
Now, I heard this phase 2 data is more descriptive. What does that mean? Are they not trying to prove it's better than competitors yet?
Not statistically, no. It's not designed for a head-to-head superiority claim at this stage. The main goal is to understand the dosing, the frequency, the mechanics.
Got it. So nail down how it works best in maintenance first.
Right, and confirm that its differentiation holds up. Remember, Maritide isn't just a GLP-1. It has a dual mechanism, and they've highlighted its impact on cardiovascular risk factors too. They need to see that continue.
And they're not waiting around for this data to plan the next steps, are they?
No way. They already have 6 global phase 3 trials running for Maritide, expanding into cardiovascular outcomes, heart failure, sleep apnea. They're moving at full speed.
Management's clearly confident, calling it truly differentiated. The market seems to be betting on that reduced frequency potential, plus the added CV benefits beyond weight loss, like improvements in blood pressure and triglycerides.
That seems to be the core thesis driving the valuation pop. But it wasn't just Maritide news. There was also a big development for Repatha.
Ah, yes, the cardiovascular drug. What was the update there?
A major one. The phase 3 Vasilia CD study met its goals. It showed Repatha significantly helps prevent a first heart attack or stroke in high-risk patients. That's primary prevention.
Okay, primary prevention, meaning before someone has already had an event.
Exactly. Currently, Repatha is mostly used after someone's had a heart attack or stroke that's secondary prevention, usually managed by cardiologists.
So primary prevention opens up a much larger patient pool.
Potentially huge.
Yeah.
Think about all the people with high cholesterol or other risk factors who haven't had an event yet. That market is largely managed by primary care physicians. Amgen called the study a call to action for those doctors.
And are they making it easier for those doctors and patients to actually use Repatha? Price is always a barrier.
They're tackling that head on. They launched a program called Amgen Now, offering Repatha for $239 a month. That's almost a 60% cut from the list price. It's all about driving access and affordability to capture that bigger primary prevention opportunity.
Smart move. Okay, so strong updates on obesity and cardiovascular. What about oncology?
Good progress there, too, especially with their bispecific T-cell engager platform. They call it BiTE. The focus was on IMDELLTRA for small cell lung cancer, SCLC.
And the data looked good.
Very compelling. In a phase 1b study looking at first-line maintenance therapy, IMDELLTRA in combination showed an overall survival of 25.3 months.
How does that compare to current treatments?
It's roughly double the survival seen with the existing standard of care. For SCLC, which is notoriously difficult to treat, that's a really significant finding.
And there's a regulatory milestone coming up to that.
Yes. The PDUFA date the FDA's decision deadline for IMDELLTRA in relapse refractory SCLC is December 18th, 2025. So another near-term catalyst to watch.
Of course, R&D isn't always wins. Did they mention any setbacks?
They did, briefly. They discontinued a study called Fortitude 102, testing a drug called bomeatizumab in gastric cancer. The reason cited was simply inadequate efficacy. It shows they're still willing to cut programs that aren't panning out, which is important discipline.
Okay, so pulling it all together, management emphasized broad, volume-driven growth across multiple areas.
Right. Bone, cardio, biosimilars, oncology. They painted a picture of a durable, multi-franchise company.
But the market reaction, that nearly 8% jump, tells a different story, doesn't it?
It really does. It screams that the market assigned almost all that new value to one thing, the option value of Maritide. The near-term data readouts, the potential differentiation, that's what drove the re-rating. The stock is now trading heavily on its potential second act in obesity.
And what did they say about spending going forward, especially into 2026? Are margins going to keep falling?
They address that. They're committed to strong margins long-term, but yes, Investment in the late-stage pipeline, especially Maritide, will remain heavy.
But maybe not another huge jump in spending next year.
That was the key message. They don't anticipate another step change increase in R&D expenses in 2026 like the one we just saw. It suggests a current higher level of investment is sort of the new baseline to support these big trials.
Got it. Okay, that makes sense. So let me pivot now. This is the part of the deep dive where we explore ideas strictly for thought exploration, of course. This is absolutely not financial advice.
It's definitely not advice, just stretching our analytical muscles.
If you had to pitch an outrageous but plausible trade based purely on this Amgen report and the market reaction, what would it be?
Okay. Given the solid core business providing a floor and all this excitement, this option value being priced into Maritide, I think a pair trade makes sense. Focus specifically on that differentiation story in obesity.
Interesting. A pair trade. What are the two legs?
You go long Amgen, AMGN. The rationale is clear. Solid operational performance, strong free cash flow, disciplined capital use, plus this significant, potentially underpriced option value for Maritide.
Okay, long Amgen. What's the short side of the pair?
You short a major competitor in the GLP-1 obesity space, someone already carrying a very high valuation, maybe one heavily reliant on the current weekly injection standard of care.
Right. So pitting Amgen's potential differentiation against an incumbent, what's the core thesis connecting those two?
The thesis is that the market right now is underappreciating just how disruptive Maritide could be if the upcoming data validates its unique profile.
Meaning the less frequent dosing and the CV benefits.
Exactly. If that YE25 data and subsequent phase 3 results confirm monthly or even quarterly dosing works well, and the CV benefits are real, Maritide could steal significant market share faster than expected.
Which would mean Amgen's valuation has more room to run, while the highly valued incumbent might face unexpected pressure.
Precisely. The trade bets on a narrowing of that valuation gap, as Amgen potentially proves out its second act in obesity, capturing share based on convenience and broader health benefits. It hedges sector risk while playing that specific differentiation angle. Again, purely hypothetical analysis.
A very focused, high-conviction idea based on that pipeline optionality. Fascinating.
So, to quickly recap our dive today, Amgen delivered a strong beat-and-raise quarter, financially solid, reinforcing its multi-franchise base.
But the massive stock rally wasn't really about Q3. It was almost entirely about the future, specifically the market betting big on the Maritide Obesity program and its potential to be truly different.
The company's narrative is shifting from managing legacy drugs to driving growth through innovation, particularly in obesity and cardiovascular disease. It's a pivotal moment for them.
Definitely one to watch closely. Before we sign off, let's leave our listeners with a final provocative thought.
Okay. We talk about Amgen's successful biosimilar business, now hitting a $3 billion annual run rate. They sound bullish on the U.S. market, but think about this. The FDA recently issued guidance that might remove the need for comparative efficacy studies for biosimilars in some cases.
Making it easier or faster to get biosimilars approved.
Potentially. So the question is, will regulatory changes like that accelerate the biosimilar market dynamic even further? Could it pose a bigger threat, faster to even more blockbuster biologics, maybe even some of Amgen's own established ones over the next, say, 3 years? It's a double-edged sword for companies relying on those big biologic revenues.
That's a great point. The biosimilar wave might just be getting started, something to definitely keep an eye on.
Well, thanks for joining us on this deep dive into Amgen's results.
We hope you found it insightful. Keep digging, keep learning.
And just a final reminder, we're analysts sharing information, not advisors giving recommendations. Please consult with a qualified professional before making any investment decisions.
We'll catch you on the next deep dive.